Hello, everybody. It's Chris Hobart here, your go-to wealthologist, helping you make some sense out of money and markets and helping to demystify the economy a little bit. Now, today I want to talk about something that we all care about and a lot of us are pretty knowledgeable about, which is housing. So whether you're a homeowner or you're a renter, or maybe just somebody curious about why prices never seem to stop climbing, well, this episode is for you. Now, I'm going to go ahead and put a spoiler out there. There's a good reason prices aren't dropping anytime soon. So stick around because I'll also share how this affects your financial game plan. Now, before we dive in, don't forget to hit that like button and subscribe for more money smart content every week delivered to your inbox. All right, let's get into it. Here's the deal. The U.S. has been building too few homes for about 15 years now. Now, we're talking about a shortage that started in 2007. You might remember that's when the housing market collapsed and a lot of builders got pretty burnt. And at that time, construction slowed to a crawl. Now, back then, this made sense. We'd overbuilt during the boom years. But here's the kicker. Even after we burned through all that excess inventory, builders still didn't ramp up. Maybe a little bit of fear built in there. Now, fast forward to today. In November of 2024, builders were starting homes at an annual pace of about 1.29 million. Now, I know what you're thinking. Chris, that sounds like a lot, right? Well, not when you consider we actually need about 1.5 million homes annually to keep up with population growth, people upgrading or downsizing, and homes lost to fires, floods, as well as other disasters. So what happens when demand outpaces supply? Well, you got it. Prices go up. That's economics 101, right? So let's talk about 2024. Single family housing starts were up about 6% compared to 2023. That's good news. But multifamily housing starts, well, they were down a whopping 25 to 30%, hitting their lowest levels in a decade. Now, that's really bad news for renters. And while we expect multifamily starts to bounce back slightly in 2025, we are still way behind where they really need to be to keep up with all these changes. So what does this mean for prices? Well, in 2024, home prices were rising at a steady 3.7% annual rate. And guess what? We're predicting a similar increase for 2025. That means buying a home is still going to be a challenge for a lot of folks, especially with higher mortgage rates in the mix. But here's something a little bit interesting. New home builders have kind of a bit of flexibility right now. If the economy slows down, they can shift to building smaller, less expensive homes to attract buyers. Now, existing home sales, though, that's a different story. You see, most homeowners who locked in super low mortgage rates in 2020 and 2021, that's what I did, they're not in a hurry to sell. Why trade in a 3% mortgage for a 7% mortgage, right? That's why existing home sales will likely stay flat in 2025. Now, real quick, I want to bust a myth. Is housing in a bubble? No, I don't think so. See, the current market isn't propped up by risky loans or overbuilding like we saw in 2007. You remember those loans you could get without even qualifying, just kind of pinky swear that you had the money and they would give you a loan as well as pay your closing costs and give you money above and beyond? What we're seeing now, this is a genuine supply and demand issue. Even if the economy hits a rough patch, housing is well positioned to hold steady or even improve slightly. So what's the real takeaway here? Housing prices are here to stay. And if you're in the market to buy or sell or invest, knowing these trends can help you make smarter decisions. Now, you may want to know how to navigate this market. Well, let's keep the conversation going in the comment section below. And remember to like this video and subscribe to the Wealthologist Weekly for more insights that keep your financial future on track. Now, until next time, I'm Chris Hobart, your Wealthologist, and we will see you real soon.